Hello friends, welcome to all, I hope you are well. In today's training video, I will tell you about the Vwap indicator. In our previous training video, a friend of ours asked if I could tell you about the Vwap indicator in the comments section. Today, I will tell you about the Vwap indicator in our training video. How do we create a buy and sell condition with this indicator? How do we determine a strategy? What is the Vwap indicator and how do we confirm this indicator? I will try to explain them to you as much as possible. If you have an indicator that is on your mind, if you specify this indicator in the comments section, I will try to shoot you a training video about that indicator, friends. As I always say, nothing in this training video is intended as investment advice. Please do not make any one-to-one transactions based on these, you will get big losses. With your permission, I move on to our training video. First of all, as you can see, a 1-hour period is open and the candles are normal candlestick charts. What is the Vwap indicator? Let me first talk about it. The VWAP indicator is volume-weighted moving averages. In other words, it is both a moving average, but it takes the values of the moving average on a volume basis. It is enough for us to know this. Then I come to the indicators part. And when I write Vwap, it comes out here as a volume-weighted moving average. But we are not concerned with that. We are also not interested in the Vwap RSI indicator here. If RSI is included, we need to use it on our long-term, high-period charts. We need to use it on minimum 4-hour charts. And we cannot create a buy or sell signal with that. That's why we use the Vwap indicator below. I click on it once and the indicator comes up as you can see. It came with a trend line. So I came across with a moving average line. The only difference is in its input settings. It takes the volume in itself and makes a calculation based on the volume. I can even show it to you like this. I choose the source code. It gives me the source code as you can see here. Here, the part that is volume to us calculates the volume. It takes the volume according to what? It says volume close. It determines a line for us according to the volume closure. Guys, this is how I show it. Now, while using this indicator, we can actually use this indicator alone. This is because this indicator is a moving average indicator, a trend indicator. And when prices rise above the moving average, it forms a trend. It also creates a trend when it falls below. Friends, we already see this, and there is an extra Bollinger Band inside this indicator, as you can see here. The fact that the Bollinger Band is in this indicator further strengthens this indicator. Because there is no need for a second confirmation indicator. It becomes two indicators in itself. There is both a moving average and a Bollinger Band. However, I will tell you how we can confirm this with a different indicator, as a second indicator. First of all, I will explain it in one way. Later, I will explain this with the indicator that we can confirm. Why do we use a 1-hour period? If we are using a volume-weighted indicator, the movements of this indicator will also be slow. The indicator itself is a formula based on a weighted average extra volume. Therefore, it does not give us very good results in short periods. That's why the most ideal usage period is 1 hour, friends. So I will tell you on a 1-hour period. Now, first of all, as you can see, prices show an upward trend when they rise above the moving average. When it falls below, it shows a falling trend. First, I click once on the input settings here. The second click, the Bollinger Band is automatically displayed. And here I click OK. Now there is something we should pay attention to when using it. The Bollinger Band plays a very important role here. Why does it play such an important role? I closed the price right now. While the price goes here, there is always a place where we get stuck. There is an issue where we will sell it. And for that, we usually draw support resistance lines. We draw a trend line here, a resistance line here. For example, we draw a support line, sell here at this price. But since this indicator has a Bollinger Band in it, it actually tells us where we can sell. Now I zoom the graph. And as you can see the middle band of orange line running through the middle. That is the middle band of the Bollinger Band. We call the one on top as upper line and the one below as lower line. The blue line that goes above the orange is also the moving average. We need to pay attention to this when making a trade here. The price needs to be above both the middle band and the moving average. First of all, this is our rule if we are using this indicator. Where do we sell this? I have explained the Bollinger Band before in previous videos. Let me say it again as a reminder. Since the Bollinger Band is an indicator that calculates volatility, it does not tell us the direction of the market. It shows us volatility. That's why its lines work as support and resistance. Here's the price we got. In other words, if we open a trade here, we need to sell it in the upper channel of the Bollinger Band as the target price. So when the price touches here, we have to sell. If we stop, this indicator has a good side. Weighted moving average says if you are using me like this, if the candle closes below the moving average, it will stop. It says to ignore the middle band of the Bollinger Band. If we don't use this, we can consider the middle band of the Bollinger Band. As you can see, the price goes up here. It sees here as a resistance, from here again the price drops down. These are for a buy and sell signal. In other words, it is mostly for short-term buy and sell signals. Let me show you a few more examples. Then let's move on to our second indicator. Another good thing about this indicator is that I will say it now. It helps you follow the trend. Since this indicator works with the moving average logic and is based on volume, let me show you, it makes us follow the trend. In other words, even without using the Bollinger Band, when the price goes above the moving average, it creates a buy condition on its own. Likewise, when it sags below, it creates a sell condition. But we're going to follow up with that as we're going to be using it with the Bollinger Band right now. If we use it here with the Bollinger Band, it will put us in and out many times. Likewise, it closes above the middle band of the Bollinger Band. It also closes above the moving average. And I'm assuming we're dealing here, it's now closed. We entered a transaction on the top. The price suddenly got a reaction from here and fell down. As I said before, if it touches the top band after leaving the middle band, don't enter a trade here anyway. As I just explained here, if you enter the process here, you will make a mistake. Because as I told you, it sees this place as a resistance. Suppose you entered the transaction here. And so far, you've probably stopped or not yet. If you stop, you haven't listened to me well. Because I told you, the price has to close below the band, but it does not close below. Again, the price goes up and goes up. So what should we do? If it is in these candles, a full candle, and it touches the top band, we should not enter the trade here. We saw it cross here and we wait for the price to come to the support. As you can see, the price has come to support. You make a purchase here, you get the profits here again. And if you follow the price, use the Bollinger Band, you go on like this. Another point is that there is a feature in the Bollinger Band if the price closes in the outer channel of the Bollinger Band. So as you can see here, if the price closes outside the channel of the Bollinger Band, we foresee that the uptrend here will continue. As you can see, we foresee the future of uptrend here. But what we always do, friends, we place a stop-loss order. If you are buying incrementally, you do not need to stop because you have already divided your money. You lower the average, you stop from the nearest average. But if you are not lowering the average, you must stop. As you can see, the price is going up. If there was no Bollinger Band, you would open a trade here in the same way, you would proceed by following it. What would you do this time, friends? Whenever the price closes below the moving average, then you would stop. In other words, you would carry a parity you bought here. As you can see, you would sell almost at the close of it. Now another issue is the second indicator that we can confirm this. This is the KDJ indicator, friends. From here, I click this indicator once. And it is opened up. What is KDJ indicator? It's a stochastic version. It contains 3 values. KDJ consists of 3 values. The KDJ indicator is a completely fast price response indicator. In other words, it shows us the overbought zones and the oversold zones. As you can see, its reference range is between 20 and 80. It tells us that the 80 region is the overbought region and the 20 region is the oversold region. And as an extra, you can draw a line on region 40 here for the reference. The reason we use this is that the zone after the region 40, we can now see it as an ideal buying place. After opening up this indicator, here is something we should pay attention to. Now this indicator also gives us a buy and sell signal. In other words, it consists of red, white and yellow lines. The location of the lines is very important here, so where the lines are is very important. They can cross each other at the same time to form a buy signal. We consider this a buy signal. But when intersecting, the red line should be at the top, the white in the middle, and the yellow at the bottom. In this way, it gives us a better buy signal. Already at an intersection like this, it intersects as you can see here. The price is above the moving average. And from here, we see that the prices are rising. Now, another issue, I'm opening up our Bollinger Band again. And here we need to be careful when using this indicator. KDJ alone does not give us a very fast buy and sell signal. So it shows us that the trend is continuing. It tells us whether the price is in the overbought or oversold area. It provides the benefit. And the moving average indicator we use is very compatible with this indicator. When we look at it now, it gives us very little signals here. But there are important points for us. Now there was a rule in the Bollinger Band. What was that rule? As you can see, if the price is on the decline and if it hangs down from the outer channel of the Bollinger Band, we predict that the price will fall. We foresee the possibility of this price to return after the candle closes inside the channel. But every time the candle closes in this way, the price does not return. And the indicator that will give us the best and most accurate signal is KDJ. We can say that the KDJ indicator gives a few signals, but gives correct signals. As you can see here now, there is a green candle and it now exits outside the channel and closes a candle inside the channel. And here we see the price go up after closing that. And at the same time, we see that our KDJ indicator is also rising. Our first selling point in this regard should be our moving average or the middle band, which is the middle band of the Bollinger Band. So when the price touches it, we have to sell it, because it will see here as a resistance. If you don't sell this here, you have two possibilities. Here you enter the trade, here you sell 50%, that is, you make a profit of 50%. You risk the other 50%. And you place a stop order at your entry. So I'm assuming you got it from the closure of this. This is your entry price, here you sold 50%, 50% left. If the price comes back here, i.e. to your entry point, you pocket the profit you sell with 50%. You don't risk yourself and here you wait for ascension. As you can see, a candle does not touch here, so it does not stop you. You can sell the remaining 50% in the upper band, that is, in the candle there, friends. If you create such a strategy yourself, you can get really good profits. For example, when you buy 0.5% from here to there, you get 1.77% profit when you sell here. If you are trading with leverage, the leverage rate you set here will increase your profit rate more. That's why the KDJ indicator is important. I hope I explained it well when using this indicator. You need to know the indicators you use very well. You need to know which indicator is confirmed with which indicator. These are very important, even if you know everything. Friends, if you are making a wrong combination and you cannot make money as a result of this wrong combination, know that the indicators you use are wrong. The indicator does not make you earn money on its own. The indicator is a secret weapon. If you know how to use it, no one can stop you. Let me tell you first, the important thing is your technical analysis knowledge. Friends, I hope there is no question in your mind about the training video. I explained everything very well. If you have any questions, my Telegram address is available in the descriptions of the video. You can come there and ask any question you have in mind. I'll try to answer too, friends. See you in the next training video. Goodbye and good luck.